We're glad to have you with us. Welcome to Business Morning. I am BC Adebayo. Oil prices are slightly lower this morning after reaching their highest since March the 6th yesterday. And this came as industry data showed a bigger than expected inventory build in the United States, where coronavirus cases continue to climb, potentially further denting demand in the world's biggest oil consumer. Industry group American Petroleum Institute reported U.S. crude inventories rose last week by 7.5 million barrels compared with expectations for a draw of 2.1 million. Brent crude was down 0.34% to $44.15 a barrel, and U.S. WTI dropped 0.43% at $41.74. The U.S. Energy Information Administration is expected to release official oil inventory data later today. And oil prices rose on Tuesday on optimism for a COVID-19 vaccine, and after European Union lenders agreed on a €750 billion fund to prop up coronavirus-hit economies. And back home now, an infrastructure development company which looks to leverage local and international funds is being designed by the central bank in collaboration with the executive arm of government. The central bank governor, Godwin Emefiele, made the announcement during the Monetary Policy Committee meeting, explaining that the special purpose vehicle will help in the rebuilding of critical infrastructure across the country. According to the CBN governor, the company, which has already secured the approval of the federal government, will be co-owned by the CBN, Africa Finance Corporation, and the Nigeria Sovereign Investment Authority, with an initial 15 trillion naira to be committed to the project in the first 5 years of the scheme. But to look at this development with me this morning on the program is the director at the Center for Infrastructure Policy, Regulation and Advancement at the Lagos Business School, Dr. Bongo Adi. Good morning, Dr. Bongo. Thanks for joining us on the program.
For having me.
Now, let's begin the conversation right away now. Some research reports have shown that Nigeria requires a sustained expenditure of almost $14.2 billion per year, which is about 12% of the GDP to rebuild infrastructure. Could the CBN-led infrastructure company be the answer to this projection?
Yes, without any equivocation. I think that is the response that we've been waiting for all these years. And it is a good thing that the CBN has, taken the bull by the horn. So it's a welcome development in the infrastructure space. Yes, 14 billion required for sustained investment over the next couple of years for us to get to what we call infrastructure sustainability in Nigeria. And then what they have is 15 trillion naira, which translates to about $38 billion. So, which means we are actually 3 years, safe if we begin to invest in infrastructure. So that is a welcome development, and I think it's complementary to all the various schemes and efforts we've seen from the CBN intervening in the rail sector in the last couple of years. So this complements that and will bring the necessary synergy to ensure that rail development happens in the country.
Now, I would like to believe that there's an existing infrastructure financing framework for the country. Of course, we have the ICRC, the Infrastructure Bank of Nigeria, and a couple of other agencies. But tell us, what's the point of a CBN-led infrastructure company?
Okay, I think this is the CBN's role, and it's a strategic imperative to address shortcomings in the economy. The ICRC is actually a regulator, so the name is Infrastructure Concession and Regulatory Commission. So it regulates PPP, ensuring that the frameworks are adhered to and the operating guidelines are followed. So that is the role of the ICRC. So ICRC is not a funder of investment. It also identifies investment and helps in the preparation of projects, outline business cases and full business cases. So, and then also licensing, so to speak, authorizing PPPs. So it doesn't fund PPPs. Now, the infrastructure bank has been in existence. Remember, the infrastructure bank used to be the Urban Development Bank of Nigeria. So I think their mandate is more encompassing, more embracing. So this is not a replication of the job or the task of the mandate of the infrastructure bank. So the infrastructure bank will still be there. So just as we have different banks, commercial banks, different mortgage banks, different investment banks, so that has not limited the CBN intervention in the RE sector, because we know the various programs to support entrepreneurs, to support and promote agri-based entrepreneurship, AXME's program, anchor borrowers programs, and all of that. So those have not led to a duplication of the role of the banks. So this is an intervention in infrastructure which is necessary to ensure to really catalyze the kind of development that the CBN has started over the years by investing in the rail sector. So without this, we will have issues with logistics, because the real problem in Nigeria right now is infrastructure. Now, having invested heavily in the rail sector, we expect that in the next couple of years, in the short to medium term, those investments will begin to yield fruit. And as they begin to come on stream, it is important that evacuation be guaranteed, and which will be provided by the infrastructure, transportation especially, and of course power and investment in other infrastructure asset classes. So that is very important. It's very critical. It's not a duplication of function, and I don't think it is. It takes out the infrastructure bank and other investment in infrastructure. In fact, we can do with any help that we can get right now.
But what about the monetary and fiscal authorities? Don't you think that this would amount to a duplication of functions between them?
No, the monetary and fiscal authorities, no. And again, I mean, this debate has been on because in the past, the CBN has been criticized for interfering in the markets, by kind of replicating the functions and the role of commercial entities, especially the banks. So some people see that as necessary. But if you look at it, one of the principles of economics is that government can also improve the market outcome. The market is not always, to be trusted to ensure that the goods are delivered, supply and demand, are at efficient levels. So there are times what we call a situation of market failure. So the only way you can correct such market failure, and we have predominant market failure in Nigeria, in every sector, in every space. So requiring governments to really play that key role of interventionist policies to ensure that those failures are somehow obviated. So that is the role of the central bank, and I think that is also in their operating mandates. So they are not going outside the guidelines. They're not going outside their authorizing mandates. So they are acting within the limit of what is provided for them all over the world. So, it is not a duplication function. And in terms of monetary policy, I think it's also consistent with ensuring that the monetary policy targets are met. To give you an example, the challenge of so many emerging and developing economies in the third world countries right now is inflation. Okay, because you have seen interventions to ensure that people survive the lockdown, the pandemic. Okay, that has some inflationary push-ups in so many countries. In countries that have diversified economies, the inflationary pressure wouldn't be that much. But here, because supply will kind of struggle to meet demand. And as a result, we have some inflationary push. So without the diversification of the economy, without us having real investment in infrastructure, you can see that we will really have some major constraints when it comes to inflation. And that has implications for our exchange rate, our purchasing power, and of course, job creation over the longer term.
Now, President Muhammadu Buhari yesterday sent the 2021-2023 MTEF document to the National Assembly for passage. Given the 5-year outlook for the initial run of the company, do you foresee a situation where the capital projects will subsequently be handled by this infrastructure development company?
Well, that's again, okay. Now I think I get what the question you asked earlier, which is about the monetary and fiscal policy. So let's look at the fiscal policy framework, the budgetary system, the provision for capital expenditure. Now, this again is a different thing. Again, so this is an intervention, okay, which has been expected since we had the constitution or the formation of the Sovereign Investment Authority, the Sovereign Wealth Fund. So everybody had thought that with the establishment of the Nigerian Sovereign Investment Authority that would be replicating the scenario that we found in countries like Saudi Arabia, where they use their sovereign wealth funds to really intervene vigorously in infrastructure. So, but that didn't happen. But I think right now the CBN coming in will actually support, because again, the fund is to come from African Finance Corporation, the NSIA, okay, and then managed by an independent infrastructure investment fund manager. So, which is to actually, so it's a different package, the different setting altogether from the provisions of the capital budget. So the capital budget will still go on. But I think for efficiency, since we are now seeing that government is moving towards privatization, because when you have a fund, you'll be interested in the optimization of that fund, you'll be interested in the yield. So it will not just be a pork barrel funding. So I just hope, I think it will be our hope that the capital expenditure framework could be managed under this, because that's what everybody has been championing over the years, that we want to see more or increase private sector intervention, private sector processes in the business of infrastructure provision, because that is the only way to ensure efficiency. So we'll be preaching the gospel of PPPs over the years as well. So we are now beginning to see that the necessary framework, the fundamental requirements are now gradually being met with the establishment of this fund. So if it comes on stream, we know that PPPs will be unlocked. And then that means we're bringing private sector expertise into the delivery of infrastructure in Nigeria. So that is a welcome development, actually. So I don't see any problem between that and the capital budgeting. If, in fact, the capital budgeting could just be managed through that, I think Nigerians will be happier for that.
Now, when we talk about the focus of the company, Dr. Adi, from the snippets that we've received so far, it looks like the firm will look more on the transportation end of the agriculture value chain as opposed to other critical areas of infrastructure demands.
Yes. Now, when we talk about production, okay, in economics, we talk about the production function. So the most important enabler of productivity in any economy are two, okay? The main indirect inputs to production, they are energy, power, and transportation. So power has been taken care of by the current administration. So we've seen the presidential initiative in the power sector. Again, that's purely privatization, because they're bringing in this company from Germany that's taking care of a lot of things in the power sector. So I've listened to the president advisor, talking about that. So I think that has been taken care of. Now, what is left is transportation. So yes, it's actually an excellent decision to tackle transportation issue, because logistics is a major problem, just as I said earlier. So with the investment, the ramping up of investment in agriculture, in the real sector, manufacturing, the support that the CBN has unleashed over the years. So it's only a matter of time before we begin to see results coming up. And then when that begins to happen, so the next constraint will be logistics. So if we do not address the logistical issues, which is what the transportation focus is supposed to address. So if we don't do that now, then that will still not help. So I think it's a right focus. So we've addressed power. Now with the infrastructure fund, we're addressing transportation. So I think we are getting it right here.
And talking about the fund now, when you look at the value committed toward the project, would you say it's too ambitious or inadequate?
Well, you mentioned earlier that the estimate is that we need $14 billion per annum to get our infrastructure stock up. Right now, our infrastructure stock, when you value all the infrastructure assets in Nigeria, it's just about 20 to 30% of the GDP. Okay, so that is nowhere near sustainability, which the World Bank recommends to be 70%. So the countries in Africa that have, South Africa has the infrastructure stock as 80% of their GDP. The Great Britain is about 70%. America is actually below, about 60%. So we are far away, 20% to 20 to 30% of the GDP. So is there any investments that will be, more than enough? I don't think so. So we have 14 billion, and then we have 30.7 billion projected to be spent at 15 trillion naira over the next 5 years. So we are not yet there because 14 billion by 5. So we will be, looking at more like 60 billion or something like that, or more than that. So, but we only have 38. So it's a step in the right direction. So I think we still need to ramp it up, but it's a good start.
Now, the project is an ownership alliance between the CBN, the AFC, and the NSIA, even though it's been run by an independent infrastructure fund manager. But do you see that activating some foreign exchange inflows?
Of course. Nigeria, despite everything that's happened to us, everybody sees Nigeria as a potential investment. So, look at the population alone, the GDP of the country, so let's consider the potential GDP growth rate. So our potential is, supposing that we put everything we have to work, the potential GDP of this country is about 7% per annum. So we are still doing below that. So everybody sees that. Everybody knows the capacity inherent in this country, the potential is latent in it. And then they know that it requires just a little to activate all that. Even as you speak now, return to investment in Nigeria is still higher compared to other countries in the world. So everybody wants to come to Nigeria. All we care about is to have foreign direct investment. So we will not be worrying about foreign exchange, issues. So if we have the infrastructure, we will produce, enough. Well, let's produce enough for our domestic market first. So if we're able to meet the domestic demand, that's huge. And we wouldn't be worrying about exchange rates in the interim. So it's not something that I think we should be concerned about.
Dr. Adi, what would you like to see integrated in the implementation plans of this project?
Okay, I think that's where the devil is in the details. Okay, so I'm smiling because, we have a problem in developing countries, especially in Nigeria. What I call, I'm borrowing from researchers, what they call isomorphic mimicry. So we like to replicate other things that happen in other places without putting in the real, human, the people issues dealing with it. Because what we have in Nigeria mainly is not the lack of frameworks, it's not the lack of so-called institutions, but what we have the lack of the right mindset, the right people who have the right ethical values to make sure that they are committed, conscientiously to the dictates of things. So, but you could see what is going on with the FCC, with NDDC. So that tells you that it's not about building structures. It's not about creating units. It's about the people. So what I would like to see would be, the recruitment of very credible people who have very sound ethical track record. And then the system should be imbued with transparency and accountability from the start, so that everything will be clear to everybody. Because the challenge that we have in Nigeria is the lack of transparency. So, and that is what creates room for corruption. So we don't want to see that happen. We don't want to hear stories tomorrow. So let us start by building in the necessary framework for accountability and transparency within the system.
The Director at the Center for Infrastructure, Policy Regulation and Advancement at the Lagos Business School, Dr. Bongo Adi, thanks for sharing your thoughts with us this morning.
Thank you very much. You're welcome.
We'll be talking about the state of social investment programs when we return in just a moment. Please stay with us. Welcome back. The federal government recently commenced recruitment plans for the Special Public Works Program which aims to employ as much as 1,000 persons in each of the 774 local governments nationwide. The takeoff of the Ministry of Labour and Employment-led project coincides with the United Nations Youth Skills Day, which aims to address the issues of unemployment and reduce poverty rate. While this is not the only social investment program of government aimed at reducing unemployment rates in the country, there appears to be concerns about the impacts of the array of existing schemes as analysts tinker with expectations from the Special Public Works Program. Weighing in now on this conversation is the Executive Director of the Africa Youth Growth Foundation, Dr. Arumet Salifu, who joins us from our studio in Abuja. Good morning, Dr. Salifu, and thanks for joining us on the program. Now, there are numerous social investment programs of government today. In fact, many would say that we've lost counts of those schemes. But how would you describe the impacts of these programs since 2016 when most of them took effect?
Thank you so much for having me this morning. The impact of the various interventions by the government since 2016, no doubt, are there to speak for themselves. However, there have been a lot of challenges, in terms of consistency, coordination, and sustainability of these interventions. We have seen situations where there have been a lot of disconnection, between one intervention and the other as a result of lack of synergy from the point of planning down to the point of implementation. We do have that challenge of even being able to account for previous, interventions and how they have been able to impact, on the target population. I think we had UWIN, we had Shopee, quite a lot. And of course, even currently, we have ESO, the Empower and the rest. There have been that consistent disconnection, between one project initiative and the other. And I think it's a challenge that government needs to address because you throw, ideas out, you throw a project out, and at the end of the day, you cannot account for how the project has been managed just 2-3 years down the line. I don't think that is the way to go. The institutions that were made to be responsible for implementation of these initiatives should have plans to do proper accountability, even if the project was to go down or to wind up. There should be a way of proper handing over the reports, the kind of impact analysis, back to the successive, project or office to handle successive, projects. And I think that still remains, a huge challenge for the government to address. They need to connect one initiative to the other to ensure sustainability is key if we must, succeed in the battle against youth poverty, unemployment, and dependency in Nigeria.
Now you've talked about the challenges of these schemes, but are you saying that these schemes have actually not yielded any form of results?
No, I wouldn't say that, absolutely. I wouldn't say these, schemes have not been able to make the right impact. The only thing I would say is if they have been able to make the desired impact, there's one thing to say if they have been able to make impact. It's another thing to say if they have been able to make desired impact, We have a major challenge, in this country, and that is the challenge of being able to have systematic approach to, addressing our problems. We rather throw money at problems and thinking that we are solving the issues or the challenge. However, the truth is that from what we have seen over the years, it's not enough to just budget for a project. It's very important that you articulate, the framework for their implementation. You need to be able to target, define your specific, objectives, the specific outcomes, and then the targeted impact that you design the project, for. At the end of the day, you should be able to measure if you have been able to succeed or not, have a robust, result framework that can determine if you have succeeded on that, a project or not. What we have seen over the years has been government, officials sitting in their offices designing, a project, and then at the end of the day, without consultation with the end users, of this project, and at the end of the day, the project end up not achieving the desired result or not optimally achieving the kind of end result anticipated from the beginning. So I think the major challenge has to do with the vacuum that often exists between the end users of these initiatives and the designers. I think there should be a robust and systematic approach to consulting the end users of each of these initiatives. Every single of the initiatives are designed specifically to address, target, population. Most often, they are designed to address youth population and the unemployment challenge among the youth population. But again, even among the youth population, we have different population, characters. You have those who are skilled, you have those who are semi-skilled, you have those who are unskilled. So you have those who are educated, who are maybe semi-educated or totally, uneducated. So you need to be able to interpret what kind of, youth population you are targeting, for a specific intervention to get the desired, result from the very beginning. And then you need to equally consult with them. What they think about the idea, the initiative, and so that you can be able to get feedback from the beginning and be able to correct mistakes that you potentially would have made on the field. That is not happening. Even with the current plan to have the public work intervention for about 774,000 young people in the country, we have not seen any robust consultation going on, between the government and the target, youth, population. That is not the way to go, if you ask me. There should be a window to consult, to get feedback on what is the best approach to ensure that this project succeeds, particularly in terms of sustainability. You cannot just sit in Abuja and design a project to target 774,000 persons across the 774 local governments in Nigeria, and you think it will just work. Project design and project management don't happen that way. We need to have a rethink in our strategies.
Now, Dr. Salifo, if you look at it now, Nigeria is yet to have an unemployment data since 2018, but we understand that the quarterly data will soon be released. So to what extent do you think the 774,000 Special Public Works Program will tackle the issue of unemployment rates in the country?
Yes, the truth is the 774,000, number is actually like a drop in the ocean. The current statistics shows that, looking at the current figure we are relying on, we have youth, we have unemployment rate around 23.something%, and youth unemployment is well over 50%. What that means is that if you extrapolate that with the population of the youth population in the country, well, we have well over almost more than 70% of the population, well over, less than 35% of the population, and they constitute about 75% of the population. Now, if you look at that and you look at the numbers, you realize that 774,000 is just a drop in the ocean. If you look at more than 50% youth unemployment rate, and you look at the current numbers, the government is planning to deploy in terms of supporting youth population, particularly regarding reducing unemployment rate, you will realize that it's just a drop in the ocean. However, I know for sure that government is doing quite a lot in other, interventions. You have the Empower, you have so many other interventions going on. I know, for instance, on the average, in each of the states, the official figure of youth unemployment is well over, on the average, around 400,000 per state. That is what we have from what the National Bureau of Statistics has revealed in each of the states in terms of youth unemployment. If you have that officially given, you can be rest assured that in each of the states we have much more than that, because data is still a huge challenge, in this country. So if you look at each local government, you are targeting just about 1,000 persons. We have well over how many persons in each local government that are actually unemployed. And that is the challenge that has given birth to many social issues that we have in the country. We talk of kidnapping, we talk of Boko Haram, you talk of Yahoo, you talk of prostitution, name it. All the social vices we have, they were not always, here with us. One chance and all of that. These are symptomatic of the fundamental, deep-rooted, problem of youth unemployment. Until we're able to, address this systematically and declare state of emergency in the area of, supporting and providing job opportunities for young people in this country, we are yet to start. That is the truth. We need to frontally address the challenge of youth unemployment if we must, support our economy sustainably.
Right.
In the next couple of years, a lot of projections have been done that Nigeria is going to be among the top 3 most populous countries in the world by the year 2050. I mean, 2050 you may think is still far away, but we are talking of just how many years away. By then, only God knows what will happen to us as a country, because oil will no longer, might not be sorry.
Yeah, I was going to ask you. You recently held a national summit on youth skills, entrepreneurship, and financing with some agencies of government involved in the special public works program. Did you air some of your views, especially talking about the challenges which you mentioned with them?
Yes, we had the National Summit on Youth Skills, Entrepreneurship and Financing in partnership with the National, the National Directorate of Employment, SMEDAN, and Nesal Microfinance Bank, which of course is a bank partly owned by the Central Bank of Nigeria and NIPOST. We had our summit, and we had well over 520 registration for it, and it took place online. Now, the highlights of the summit, was such that a lot of young persons at this moment are totally stranded. The revolution is amazing that a lot of young people have lost hope in the country. They are looking forward towards possible self-help in some instances. And why are we, discussing, in the 21st century issues around youth unemployment when other countries are already talking about even bringing other people from other countries to support their economy because they have enough jobs, for young people. We should think, we should act proactively as a country as to how best to sustain our youth population, to support our youth population. I'll give you this, feedback from the summit. One of the major challenges we have is that from secondary school to university, a lot of these young people support themselves. And then after school, they still have to pay to get government jobs, to get some kind of jobs. A lot of, extortions take place right now in the system. Now, for many of them who actually feel that they could, support themselves in terms of businesses, the red tapeism, the access to training, the access to entrepreneurship support system, the access to finance is still a huge, challenge for many of them. And so the summits, made a lot of them to interact and interface with, the various government agencies. The DG of Smedan was personally there, and he did a wonderful work at presenting what Smedan, has been doing. Now, before you can actually talk of reducing unemployment in the country, you have to think of the entire ecosystem. Before you can properly support young people, you need to think of the kind of skills that can, be provided for them. You need to think of the kind of entrepreneurship mentoring that they need to have. Then you need to equally think of the kind of financial support that can help them to start the business. Now, we have, a stratification of these young people across this broad spectrum of the youth support value chain. Starting from skill acquisition, a lot of them need skills. Going to mentoring, a lot of them need mentoring. Then coming down to finance, a lot of them need financing. If you look at all of this, and you look at what government has budgeted, for these agencies, for NDE, for instance, for SMEDAN, for instance, even ITF, Industrial Training Fund, you look at their budgetary provision, you notice that they literally have no sufficient budgetary provision to support their mandate, particularly with the huge unemployment population in the country. So our politicians, our leadership need to prioritize funding these agencies to be able to effectively deliver on their mandate and to massively reduce, the current level of unemployment in the country. Of course, the fiscal the monetary authority, like the central bank, is already, doing a lot. They have set up the Niso Microfinance Bank, and of course, we have a lot of schemes, under the Niso Microfinance Bank. One of them has a portfolio of well over 500 billion every year, to be accessed by young people in different areas: agriculture, creative industry, so many other sectors that young people could venture into. But another challenge that we have is that apart from the fact that government is doing this much, a lot of young people don't have access to this information. So there's need for awareness on these opportunities for young people to know and how to key into these opportunities. And that was one of the achievements of the summit. A lot of young people were made to understand that these opportunities exist and this is how to go about it. So currently, we are interfacing with between young people and some of these agencies on how best, to assess these opportunities. Just before coming to the studio, one of the participants sent me a mail that he has been approved to access the Niso Microfinance Bank loan. However, he has not been credited. And now we are following up with the Niso Microfinance Bank to see how, the young man could be credited so he could start, his business. So we have,
Sorry, I know that you're very passionate about this, but I'm afraid time will not permit us to go beyond this point with this conversation. But we'd like to thank you, the Executive Director of the Africa Youth Growth Foundation, Dr. Aramin Salifo, for speaking with us on the program.
Thank you so much.
It's time now to review yesterday's equities market activities with Edidiong Iwan. Good morning, Eddie. Let's go through the numbers.
Good morning, BC. Well, it is said that when Dangote Cement sneezes, the market feels it. So that's what happened yesterday when the stock declined by 3.17%. Now, there hasn't been any movement in the share price since July the 7th. So, of course, that impacted the market yesterday. The all-share index declined by 0.39% to 24,174.45 points. Now, the market lost about 50 billion naira as the equity cap fell to 12.610 trillion naira from 12.660 trillion naira on Monday. Now, a total of 304.18 million shares worth 3.26 billion naira changed hands in 3,500 deals. FBN Holdings was the most traded stock in terms of volume, while Nigerian Breweries was the most traded in terms of value. Now, it's a red picture on the sectoral chart. Industrial goods lost the most by 1.57%. Of course, that's due to the declines on Dangote Cement. The banking index was down marginally by 0.07%. That was as a result of to losses from Zenith Bank. Consumer goods was also down marginally by 0.06% as Nigerian Breweries shaved off by 9.21%, while insurance declined 0.93%. The oil and gas sector was unchanged yesterday. We didn't see a lot of movement on that counter. At the NASD market, the NSI was unchanged yesterday at 706.64 points, with the market cap at 519.08 billion naira. We saw just about 8,365 units worth 82,260 naira traded in 6 deals. But we'll have to leave it there for now, BC. Over to you.
All right, Adidyong, let's see if the markets will just make a U-turn today. Juliana Olayinka is ready for us at our London studio for this morning's business updates. Good morning, Juliana. So the Royal Bank of Scotland has formally changed its name to NatWest Group, removing Scotland from the name of the lender's parent company for the first time since it was founded in 1727. Why the name change?
Good morning, Bissy. Well, according to some economists, it's to get rid of the toxic past that RBS, the Royal Bank of Scotland, now the NatWest Group, had been broiled in. And it really centres around the 2008 financial crash. They received a bailout from the government worth tens of billions of pounds. And now that the government are trying to sell their stake in RBS, they're running into problems. And that's really due to the COVID-19 pandemic. A lot of investors are putting their money elsewhere or keeping their purses locked. Just a couple of days ago, the Office for Budget Responsibility said that selling the government stake in RBS could take a further 5 years, costing the taxpayer more money. And now Alison Rose, she's the chief exec. She's been releasing a series of statements today. I'll read one of them. She said that it's a historic day for the bank as we intend to change our name to NatWest Group. Although there will be no changes for customers, it's a symbolic moment for our colleagues and stakeholders. The bank has changed fundamentally over the last decade, and now is the right time to align our group name with the brand under which the majority of the business is delivered. Of course, NatWest, that is one of their most profitable arms, and they just believe it's a great time to do so. Also, Alison Rose, there have been a number of changes, just trying to change the image of the banks. Banks have, of course, had a pretty tough time since the financial crash over 10 years ago, and RBS feel that shifting this moniker for a new moniker will be better for them. They also announced this morning the appointment of pretty well-known economist here in Britain, Lord Stern. He's going to be one of their independent advisors helping with the environment and climate changes.
We'll see how that goes. Now, let's talk about the controversial investment app Robinhood, which has delayed its UK launch indefinitely as it wrestles with pressure from US politicians after one of its customers killed himself. As of last week, the app had a waiting list of more than 250,000 people in the UK ahead of the launch, which was planned for this year. But how much do we know about this investment app?
Well, it's a US-based Silicon Valley app. I believe it's worth about $8.5 billion. They've got over 13 million users. They were due to start in the UK, but they released a statement, I would say disappointing the 250,000 people that were waiting for them, saying that they are going to put those plans on hold indefinitely. They said there have been many a global challenge, and even though they are still wanting that international growth, they are going to solely be focused on their US home growth. Now, it was The Guardian that reported that this potentially could have links to a student, a 20-year-old who committed suicide. It's all allegations, but apparently one of the users, well, this particular user, Alex Stern, believed that he had lost $750,000 on the app and killed himself, and it wasn't to be the case. Robinhood describe themselves as an app that tries to democratize trading. You don't pay a fee. You can sell and buy new stocks as and wish you please. And there are people who hail it as making millions. In fact, they say they've made tens and thousands of millionaires, which is why I presume there were 250,000 people in the UK waiting to sign up. But they have stopped this sale. No links to this suicide, which happened really recently. And of course, the Financial Conduct Authority, the regulators here in Britain, did permit them to trade here in the UK. So it clearly is a case that they're pulling out under their own terms.
In another development now, the CBI is saying the installation of new gas boilers must be banned from 2025 or the UK's net zero climate targets will be doomed. What will this entail? Are Londoners ready to make this switch?
Well, yes. Well, there's no choice, Bissy. The climate emergency is a top priority for the majority of governments in the West. Britain are trying to put themselves out there as the government that is the lead in doing this. And so they asked the CBI to come up with this pretty detailed report in conjunction with the University of Birmingham. And what they said is that if Britain is to reach their net emissions goals, then they can no longer be putting in these new, these old-fashioned, old-style carbon-producing heaters in new homes from 2025. In fact, they say they want it to be banned by 2035. Heating is the largest producer of carbon here in the UK, and trying to find ways to decarbonise heat is one of scientists' top priorities here. One of the incentives that the CBI is recommending for the government is that they offer loans and grants to businesses who are trying to adapt a kind of fuel, environmentally friendly new heaters, and that's something that will potentially be scaled out over the past couple of years. But as we've seen with electric cars, as we've seen with smart energy, there is no choice in this matter. Once the government decides that that's the route, then that's the route that's taken.
All right, Juliana, thanks for those updates. We'll see you again in the afternoon.
Thank you.
And it's back to Edidian for a review of the debt and currencies market. Over to you, Eddie.
Thanks, BC. The bond market maintained its relatively bullish trend in Tuesday's session as bond coupon payments spurred buying interest in the market. Now, demand was seen across board, although with a less aggressive note, as participants anticipate the bond auction today. In all, yields declined by 11 basis points. There were 27 deals worth 16.80 billion naira. The Treasury bills market maintained its quiet trend yesterday, with buying interest seen on the mid and long tenor maturities on the back of improved liquidity system. We saw some declines in the July 2021 maturity date. In all, we had 7 deals worth 1.68 billion naira. The bond market too, we saw average yields decline by 49 basis points to close at 5.11%. With buying interest in across board. We had a total of 40 deals worth 38.11 billion naira. But let's talk to Chioma Udu, a fixed income dealer at GT Bank. Good morning, Chioma. Thank you for joining us on the program.
Good morning. Thank you for having me. Please, can you speak a little louder? I can't really hear you.
Oh, sorry about that. The bond market was quiet yesterday. How will today's primary market auction shape trading?
There's actually a lot of interest in the bond space. The money market is very liquid. It's above 400 billion up. And this is on the back of fact posting of about 300 billion that came into the system. And then coupon payments on the 34 and 26. Today's auction, there are four maturities on offer: the 26, the 35, the 45, and the 50. 130 billion is on offer. And in the stage, there's going to be a lot of interest in that space. We also expect that the rates will come at current market where the market is trading, which is currently at sub-11.
Lately, we've seen traction in the Nigerian Treasury bills market. What's the reason for that?
The liquidity in the system. We've seen continued liquidity coming to the system. So we have seen a lot of investors trying to seek out investable assets, which includes the Treasury bill market. The bullish trend yesterday was we saw pockets of buys across the tenors of the curve.
Thank you, Chioma, for your input on the program. Chioma Udu is a fixed income dealer at GT Bank. That's it on the market review. Over to you, Bissy. All right, Adidiong, as always, we'll always hope for a profitable trading day. And that's where we wrap things up today on the program. Thank you for watching. I am Bissy Adebayo.